All right, so if you're a trader and you have bad timing in the markets, that is, every time you enter a trade, it seems like it goes against you, just implement this one trick and I guarantee you'll see some better results. Okay, so a mistake that a lot of traders do is that they consider pretty much any point on the chart where price has gone up in the past as an area where price should go up in the future, and that's not the case. For example, when we see that price went up from this point right here, a lot of traders would just immediately start buying at that point. But as you can see, that probably wouldn't work out too well and your timing would be way off. So a better way of looking at it is analyze how price moved away from that point rather than just the fact that it moved away from that point. So for example, this low right here is way more significant because we broke through new highs and we had a much sharper reaction from that level, whereas this point we saw barely any reaction and no new highs. So here's a chart of AMC on the 1 hour time frame. This point right here was a random point where price moved up and away from, and you could see that that probably was not the best area to buy. But this point where price sharply moved away from with a lot of force was a great point to buy.